Good morning, all of you. So let's start with topic of income from salary. Okay, income from salary, as you know, is the first head of income. It is first head of income, income from salary. It is covered in section 15 to section 17. That's it. Only three sections, but with lot of rules also. Lot of income tax rules also. So topic is vast. Okay, so why does this topic get vast? It is section 15, 16, 17. 15 is charging section, 16 will talk about deductions, and 17 will talk about some perquisites. Okay, so but apart from that, there are some allowances of which you get exemptions. Those are covered in section 10. Okay, so in order to understand this topic, we have to understand 15, 16, 17, some exemptions from section 10 and rules, income tax rules. So that's how this topic becomes bit vast. Our discussion of salaries will continue for next today and maybe entire tomorrow's day also. Okay, so about 6 to 7 sessions, big 6 to 7 sessions we will need for salaries. So write down, take fresh page and write down income from salaries. Income from salaries in your provisions and concepts book. Section 15 to section 17, in which 15 is charging section. What is the importance of charging section? It creates a charge. Okay, so whenever there is employer employee relationship between payer and payee, then whatever payee gets from employer via this relationship will be taxed under the head salary. So there should be employer employee relationship. So write that 15 to 17 talk about salaries. Of course, 15 to 17 of Income Tax Act. Whatever sections we will be discussing, they will be of Income Tax Act. So 15 to 17 of Income Tax Act deal with salaries. 15 is charging section. Charging section is talking about relation between payer and payee, that of employer and employee. Relation between payer and payee should be of employer and employee. Clear? So whatever employee gets, that will be taxed under the head income from salaries. Clear till this point? Is it clear till this point? Salary is taxable on due basis or receipt basis, whichever is earlier. Means what? Means what? When it gets due, it becomes taxable. Means salary of April, I will get in the month of May. Salary for May, I will get in the month of June. So on. So salary for last month of the PY, that is salary of March, I will get in the month of April. So salary of March 24, I will get in the month of April 24. But still, I will consider that I have received salary for 12 months. Understood the point? Did you get the point? So what happens? Salary for mostly salary which will get due in April will be paid in May. Which will get due in May will be paid in June. this way, if I have joined my company on 1st April 23 and I continue with my job, then how many salaries will I get in the month? I will actually receive in the financial year 23-24 11 salaries, because April's I will receive in May, May's I will receive in June. This way going ahead, March 2024 salary I will receive in April 2024. So actually I will receive only 11 salaries, but still I will pay tax on all 12, because salary is taxable on due basis or receipt basis, whichever is earlier. So point is, salary of March 2024 got due in March 2024 itself, but it was paid in April. Got it? So it is taxable on due basis. But sometimes I may take advance salary. So advance salary will become taxable at that point when it is actually received. So that's why what I'm saying, it is taxable on due basis or receipt basis, whichever happens earlier. So what happens? Suppose in the month of March 24, in the month of March 24, I told my employer I want 2 months salary in advance. Then in March 24 only, he gives me salary for April and May. So now what has happened? It is received in March 24, but it will become due in April and May respectively. That means it will become due in next financial year, but it will be taxable on receipt basis because it is earlier than due. Getting it? So write this: salary is taxable on due or receipt basis, whichever is earlier. Write down: salary is taxable on due or receipt basis, whichever is earlier. Salary is taxable on due or receipt basis, whichever is earlier. Example: PY, for PY 23-24, you are writing now. Example: for PY 23-24, X joins an organization at salary of 50,000 per month. Salary becomes due on last day of the month, but it is paid on 7th of next month. So in this case, what will happen? It gets, when it gets due, it gets due on last day of month. But how is the cycle of payment? Payment is done on 7th of next month. So example, for April it is paid on, for April 2023 it is paid on 7th May 2023. So this way, as I go ahead, I am interested in checking salary for the month of March 24, because March 24 is the last month of the PY 23-24. So what will happen for March 24? Salary will get due on last day of the month. It will get due on 31st March, but it will be received on 7th April. When to tax it? Exactly. Tax it in the month of March itself. That is the point I am trying to explain you. That is the point I am trying to explain you. So now for PY 23-24, taxable salary will be 50,000 into all 12 months. If you check your bank account, you would have received in 23-24 only 5,50,000 and not 6 lakh, because balance 50 you received on 7th April 24. That's why, friends, each head of income matters, because each head of income will tell you how that income is supposed to be taxed. So you cannot sit with your bank statement, check your receipts and pay tax, even if you know the slabs. So it's okay, you know the slabs, but that are to be applied on total income. And total income is sum of all five heads of income. Getting it? So you should understand each head talks about computing income in which fashion, in which manner, what deductions it allows, what exemption it allows, and it tax in which way. So here it is taxable on due or receipt basis, whichever is earlier. Now, say in above case, X takes advance salary for 2 months. Then what will happen? If he takes advance salary for 2 months in March 24, then what will happen? When he will receive that advance salary? In March. So it will be taxable in March 24, that is PY 23-24. His salary is 50,000 per month. So 50,000 into 2, he has received in advance 1 lakh. So now taxable will be 6 lakh plus 1 lakh, 7 lakh. Of course, in PY 24-25, this 1 lakh will not be taxed again. You have already taxed it. Never ever you will have double taxation. So here I reach till 7 lakh as my salary. If there was advance salary received. Clear? Did you get? Did you get? So reach till 7 lakh. Shall we go ahead? There is a thin line of difference in one concept. Advance salary will be taxable on receipt basis, you have understood. There is something called as advance against salary also. What is advance against salary? Acha, I say that I go to bank and I say that I have life insurance policy, give me loan against that. Or I have FD with your bank, give me loan against that. Means what? That is kept as a security. And against that loan is given. Now here we are talking about advance against salaries. Means what? We are talking about as a loan received from employer. Advance salary is your own income. Advance against salary is a loan. In both cases, you are getting the amount. No difference. You are getting the amount in the bank. But one is advance salary, which will become taxable on receipt basis. And one is loan. Loan cannot become taxable immediately. Loan cannot become taxable. How can loan be taxable? So there is a thin line of difference. So if instead of that 1 lakh as advance salary, if I take some same 1 lakh as advance against salary, it will not be taxable immediately. It will become taxable in the next year. So thin line of difference between these two concepts. So next time, don't take advance salary. Take advance against salary. Getting it? So that is a difference. So just write down difference between advance salary and advance against salary. Difference between advance salary and advance against salaries. Understood now? Difference between advance salary and advance against salary. So advance salary, as you have learnt, is taxable on receipt basis, but advance against salary is what? Advance against salary is in the nature of loan from employer, isn't it? So what will happen? It will become taxable in that PY in which it is actually received, when salary is actually received. Means when salary will become due, at that time it will become taxable. When you receive the loan, at that time no impact, because loan is like to be repaid. So loan is not your income. So same 1 lakh, if I took as advance against salary, then taxable in PY 23-24 will continue to be 6 lakhs. That 1 lakh cannot become taxable in 23-24. That will become taxable in 24-25. That is a difference. You have to understand that. Shall we go ahead? Now, see if you understand this, what I have done. Whole salaries, see, I'll tell you one thing. I'll tell you one thing. When your friend starts with a job or your senior starts with a job, you ask him a question, what is your package? You don't ask him what is your salary. Or the term used is package and not salary. Because package will have so many things. Package will have monetary benefits like basic, bonus, commission, dearness allowance. Getting it? That will have monetary benefits. Monetary benefits means given in terms of cash, money, actual money. That is monetary benefits. Then there will be something called as allowances. Allowances means they are also monetary benefits, but given in the form of allowances. Like if you are working in night shift, then there is some extra allowance. Okay. For accommodating your meal, there could be a meal allowance. So there are different type of allowances. So monetary benefits, allowances. Then you could get some benefits in kind. If you are at specific level na, in the employment, if you are at specific level, then you will get some type of benefits like accommodation. Yes, those are called as perquisites. Benefits in kind. You could get car from your company. So accommodation, motor car, telephone facility, medical benefits. You can receive periodically gifts. So all these are what? If you ask for loan from your company can give you loan for some concessional interest rate or interest free loan. They can sell their assets to you at a low price. They can give you assets for use. So many benefits can be given. And most important benefit, they can give their shares to you. ESOPs. In accounts, have you learnt? Employee stock option plans, ESOPs. So they can give you employee stock option plans where you can get shares of that company at a concessional price. So this is also benefit. So many benefits you can get. And many benefits means actually it is endless. Your credit card bill can be paid by company. You can be given made at home at the expense of the company. So you just imagine, and that can be benefit given by employer to employee. But this benefit has to be taxed. So this benefit you will value, and that value you will tax. See, if employer is giving 50,000 rupees basic salary, we can see that money in the bank. So we understand it is the amount taxable. But employer is giving me home to stay. If they wouldn't have given me home to stay, I would have to arrange. So actually giving me home to stay is a benefit for me. So that benefit has to be valued. Understood that benefit is in kind, but convert that in kind benefit to money terms. Don't pay that money to anyone. Just notionally calculate it, and that value exposed to tax. In short, your gross taxable salary will include monetary benefits, allowances, perquisites, value of perquisites, and exemption for allowances will be subtracted, and only final amount will be taxed. Monetary benefits will become fully taxable, allowances will get partial exemption, perquisites will be valued, and that value will become taxable. Apart from that, you will get some provident funds. You will get some employer contributing in your PF for your future. So that also can become benefit. And lastly, when you retire from the job, when you leave the job, like for example, my brother worked for 7 years in one company and left that job. So company gave him gratuity. Gratuity means as a gratitude what employer gives to employee, thank you for doing the job consistently for more than 5 years in my organization. So take this gratuity, lump sum amount given at the time of quitting the job. Even if I am saying retirement, it doesn't mean permanent retirement. It might mean leaving the job and then shifting to next job. So if you're doing job for more than 5 years, then certain type of employers are compulsorily required to pay this gratuity. Pension. These days out of fashion, but still pension you have to learn technically for few years. Then it will be removed from income tax slowly, because still certain employees continue with pension. Pension is after retirement. And lastly, leave encashment. Leave encashment means as a hard-working employee, I did not take the leaves, or I took less leaves than I was entitled for. Means I was entitled every year for 30 days leave. But on an average, I took 10 days leave. So I worked extra for 20 days each year. And this way I worked for 7 years. So 7 into 20. As compared to my colleague in the organization, I have worked extra for 140 days during my service. So for that 140 days, I will get salary when I retire. So that cannot become fully taxable. That attracts some exemption. So that we have to learn. So I am talking about 5 things. If you observed, I am talking about 5 broad categories of benefits that you are getting from employer. What are those 5 broad categories? 5 broad categories is: number one, monetary benefits; number two, allowances; number three, perquisites; number four, PF, employer's contribution to PF and interest which get credited from PF; and lastly, retirement benefits like gratuity, pension, and leave encashment. So go ahead and complete this step by step. I am guiding you. Under my guidance, complete this. In your provisions and concepts book, write down salaries. Give the heading package. Write down salaries. Give the heading package. Your package can have what all things? First, A. Monetary benefits. B. Allowances. C. Perquisites. D. SPF, RPF, UPF. E. Retirement benefits. Salaries means your package can have 5 elements. Please make 5 branches in a notebook. Very good way of doing it is the landscape of your notebook. I will show you just. So see, whenever now in income tax I say landscape, this is portrait, this is landscape. So if you do in landscape, then it is easy to accommodate such charts. Okay, so especially in income tax this will happen because lot of data has to fit. Yesterday someone asked me question about gifts. So I have shown you, a gift is so big chart. So from now onwards, some charts which we are making, it is impossible for them to fit in portrait. So you have to do landscape. This is portrait, this is landscape. So go for landscape of the notebook if possible. Make 5 branches: monetary benefits, allowances, perquisites, SPF, RPF, UPF, and retirement benefits. A, B, C, D, E. You can call them. A, B, C, D, E. You can call them. So basically your package has monetary plus non-monetary benefits. Okay, so those who are watching online can pause and complete this. I am zooming, some part of screen might get cut. Be aware. So monetary benefits. Monetary benefits will be basic, bonus, commission, incentives. Basic, bonus, commission, incentives are monetary benefits. Here I am discussing about monetary benefits other than allowances because I want to discuss allowances separately. Because I want to discuss allowances separately. Understood? Monetary benefits. After monetary benefits, after monetary benefits, please write allowances. What is the feature of monetary benefits? Monetary benefits are always fully taxable. So our discussion about monetary benefits gets over at this point. Because anyways, monetary benefits are always fully taxable. Clear, na? Monetary benefits are always fully taxable. After monetary benefits, please go to allowances. Please go to allowances. Allowances will be covered in 2 parts. What 2 parts? What 2 parts? Duty based and personal. Please write duty based and personal. Duty based means those which are given for performing the duty in employment. Like you have seen, some companies have uniform. So to maintain that uniform allowance can be given. That is duty based. So duty based allowance will be exempt to the extent amount spent, because that is given for spending only. So if you spend that, no problem, it is exempt. But from that duty based, if you save something, if you save something, then that saving element will become taxable. So duty based is, what happens with duty based? What happens with duty based? It is taxable to the extent amount saved. So how much is exempt? Amount spent is amount exempted. If I talk about personal allowances, if I talk about personal allowances, then personal allowances, if I talk about personal allowances, then personal allowances are those which are covered by section 10 or those which are others. Name, what is section 10 in Income Tax Act? Section 10 in Income Tax Act is exemptions. Exemptions means incomes which do not form part of total income, means tax free incomes. So some of the allowances are covered by section 10, and then there are others. So of course, friends, those which are covered by section 10, those which are covered by section 10 will be partially exempted. Maybe not fully, but they will be partially exempted. Those which are covered by section 10 will be partially exempted, and others will be what? Others will be fully taxable. Means those which could not be covered in section 10 will be fully taxable. Clear, all of you, what I said? Is it clear to all of you what I said? So, in others, you have got tiffin. Example of others is tiffin allowance, medical allowance, pet allowance, dearness allowance, and any other thing that you can imagine. Personal. These are just examples. They all will become fully taxable. And allowances which are covered by section 10. What are the examples of them I have given you? Most common ones I have given you. House rent allowance, children education allowance, hostel expenditure allowance, and transport allowance. Please mention them. Please mention them step by step. House rent allowance, children education allowance, hostel expenditure allowance, and transport allowance. Do it sincerely. Huh? Do this table sincerely. Monetary benefits, fully taxable. Allowances dividing in two categories: duty based and personal. Duty based, exempt up to amount spent. Personal, divided in two categories: those which are covered by section 10 get partial exemption, others get fully taxable. Clear? Come to your perquisites, friends. Come to your perquisites. Come to your perquisites. Are you there in perquisites? Perquisites means what? Perquisites means what? Non-monetary benefits, or you can say benefit in kind. Divide it in two categories. There are some perquisites which are taxable, and there are some perquisites which are tax free. So taxable perquisites, tax free perquisites. Tax free perquisites value will be zero, and taxable perquisites you will have to find out the value, which will be given in income tax rules. How to find this value will be given in income tax rules. Did you get the point? Do it very sincerely. Do it very sincerely. Monetary benefits, allowances, perquisites. Then go to your D point, SPF, RPF, UPF. Statutory Provident Fund, recognized Provident Fund, unrecognized Provident Fund. SPF, RPF, UPF. You know, this is helicopter view of this chapter. We are going to land our helicopter on every point. So this is helicopter view. And then comes retirement benefits. Agreed? Done? Done? A, B, C, D, E, all points, all of you. Shall we go ahead? Do you give me permission to go ahead? Okay, before going ahead, I would like to show you one thing. Before going ahead, I would like to show you one thing. I was doing this today morning so that topic becomes easy for you. What is discussed here? What is this person telling you? What is this person telling you? Listen carefully. You know now there are two regimes of paying tax. One is your default. So default is strict in not allowing you some exemptions and deductions, because default is offering you low rates of tax. So default will say less exemptions and less deductions. Isn't it? Default will say less exemptions and less deductions. So when you are going for default tax regime, then some deductions and allowances are not allowed. So what I am saying here, not allowed exemptions and deductions in salaries while computing tax under default regime, that is 115 BAC. So what exemptions will not be allowed and what deductions will not be allowed? So remember, the main exemption of HRA, which we are going to discuss, not allowed. Children education allowance, not allowed. Hostel expenditure allowance, not allowed. Leave travel concession, not allowed. But still, should we learn it? Yes. Because what we are out of, what if we are out of 115 BAC? What if we opt for the old regime? If we opt for the old regime, we will have to take these exemptions. So your batch is again revolutionary. You have to do this. Because for you, both regimes matter. Because in exam, if I put you one question of salary and tell you that this assessee has opted for following old regime, that is, he is not paying tax under 115 BAC, then you will have to take the exemptions and deductions. So you have to know them also. But if in the sum they say that he has opted, I mean he is paying tax under default regime, then don't take exemption. Getting it? So we will have to learn exemptions. Bottom line is we have to learn everything and keep our mind open whether we have to apply exemption or not apply. If you're in old regime, apply exemptions. If you're in new regime, don't apply. Don't apply which exemptions? These exemptions. Then you are going to discuss some deduction under section 16. Don't apply them. Two of them don't apply. You are going to learn three deductions in 16. Out of that three don't apply, two. And there is one small perquisite valuation which we are going to do. Don't apply. Okay. Clear? So let's learn now allowances. Go to allowances. Go to allowances. Write down allowances. Partially exempted under section 10. By the way, if you have studied properly, A, B, C, D, E point. A point discussion is over. What is A point? Monetary, its discussion is over because it is always fully taxable. So no discussion. If you have studied allowances properly, there are two parts in allowances. Duty based and personal. Duty based discussion is over because they are exempted to the extent amount spent. So that I cannot tell you. That will be given in the question. So discussion is over. Then in personal there are two possibilities. Section 10 and others. Others discussion is over because others are always fully taxable. So I should discuss what now? Section 10. Why? Because they are partially exempted. So I should explain you how much exemption you can take. That's what I'm doing. So allowances. Write down. Partially exempted under section 10. Allowances partially exempted under section 10. First is children education allowance, one useless amount of exemption, 100 rupees per month per child. It is since the time of Akbar emperor that this amount is continuing, means it is from 1999. They have not changed it in 2024 also. Just to trouble you, they have kept it. They should have deleted this. 100 rupees. In 100, it took, I mean, I took auto and my 100 rupees were spent. So 100 rupees per month per child is exemption they are giving of children education allowance. So your employer may pay you any amount, but exemption will be 100 rupees per month per child to the extent of two children. Clear? Hostel expenditure allowance. Friends, hostel expenditure allowance. Its exemption will be 300 per month per child. Again, I am not convinced with the figure. 300 rupees per month per child to the extent of two children. Transport allowance. Transport allowance is allowed, very important point, allowed only for physically handicapped employees. Allowed only for handicapped employees. How much? 3,200 per month. By the way, this will be allowed, transport allowance will be allowed even in 115 BAC. But first two will not be allowed in 115 BAC. And then comes most important, most relevant, most used, and most helpful for the employees, house rent allowance. And significant in today's day because figure is good of exemption. Unlike first two figures. So can I focus on HRA? Exemption will be least of following three. Exemption will be least of three. Good point is there is no monetary limit. It is all linked with your salary and your rent paid. It is all linked. So how much is HRA exempted? This exemption is given in section 10 subsection 13A of Income Tax Act. First point is HRA received. Second point is rent paid minus 10% of salary. Rent paid minus 10% of salary. For salary, I am putting asterisk. And third is 40% or 50% of salary. I am putting a hashtag on 50%. HRA received, rent paid minus 10% of salary, 40 or 50% of salary. Salary has so many components. So exactly which components are to be taken? Which components are to be taken while computing that salary? So basic plus DA, which DA? That DA which is given formally. That DA which is as per terms of employment or forming part of retirement benefits. Means that DA which is fixed from the beginning, not any lump sum dearness allowance. So basic plus DA terms of employment slash forming part of retirement benefits plus commission. Which commission? Commission which is linked with sales, not that commission which is lump sum. So that commission which is percentage of sales. That is your definition of salary. Did you all get? Did you all understand? Basic plus DA terms of employment plus commission percentage of sales. So see friends, in exemption of HRA, first point was actual HRA received. That will be given in the question. Second is rent paid minus 10% of salary. So rent paid will be given in the question. Salary you can find out. Take 10% of that. Rent paid minus 10% of salary. Third, 40% or 50% of salary. 40% in other cities, 50% in these four cities. 50% when you are paying the rent in Mumbai, Delhi, Kolkata or Chennai. Complete this. 50% in which cases? And in all other cities it will be in all other cities it will be in all other cities it will be 40%. Clear all of you? 40% in all other cities. Shall we go ahead? Did you understand? Allowances. Of course, if you are going for 115 BAC, then you don't get any exemption for this HRA also. Now, one more point we can do immediately, that is deductions. So, small parts I am completing first. Deductions. And deductions from GTS. What is GTS, friends? Gross gross taxable salary. Gross taxable salary. So understand, when you take total of monetary benefits plus taxable allowances plus taxable perquisites plus taxable retirement benefits plus taxable RPF, employer's contribution, then you will get GTS, gross taxable salary. From that you can take deductions under section 16. Please, deductions under section 16. Most important 1A. 16 1A. 1A is of what? So there used to be 16.1 which was deleted, omitted by assessment year 20, from assessment year 24-25 it was omitted. So 16.1 is not there. 16.1A. What is 16.1A? Standard deduction. And friends, what is speciality of standard deduction? Who will tell me speciality of standard deduction? 50,000 is not speciality, it is the limit. Speciality is if even if you go for 115 BAC, it is allowed. So standard deduction is allowed even for 115 BAC. So always allowed standard deduction. You are paying tax in old regime or you are paying tax in 115 BAC, standard deduction shall be allowed. Understood? So if you had seen what my assistant is saying, if you have seen what my assistant is saying, he is saying that not allowed exemptions or deductions in not allowed fifth and sixth point. What is saying? Which deductions will not be allowed? He is saying 16.2 and 16.3 will not be allowed. He is not talking about 16.1a. He has not made a mistake. He is correct. He is absolutely correct. You will be allowed. You will be allowed standard deduction in all cases. Then second is what? One very less used deduction of entertainment allowance. Why I am saying less used? Less used is a good substitute for useless. It is only for government employees. Very important. It is only for government employees. That's it. And that too least of three. So sometimes I feel some figures and some limits and some things are put in income tax act just to trouble you. So entertainment allowance as such no use, only allowed for government employee to the extent of least of 3. What 3? Actual entertainment allowance received, 20% of basic, or 5,000 per annum. And lastly, you have got profession tax. Lastly, you have got PT, profession tax. I would like to repeat, entertainment allowance and profession tax deduction not allowed if I go for 115 BAC. Is this all updated in your provisions and concepts notebook? Updated? All these things? 100%. Now go to an example. I'm asking you in the example, what I'm asking you in the example. See, I'm asking you NTS, net taxable salary. Okay. So how many figures are there? How many points are there? There are 12 points, I think. There are 12 points. Using those 12 points, we have to calculate net taxable salary. Okay. So what is the system? You will take all these 12 figures. While taking them, we will discuss about them. Then we will solve. In your which notebook? Practice notebook. Problems practice notebook. Write down. Give the heading. Mr. B is been given following emoluments. Emoluments means benefits. So Mr. B is been given following emoluments during FY 23-24. Mr. B is given following emoluments means benefits during FY 23-24. And see what I am telling you. Till this point clear? See what I am telling you. Compute net taxable salary in two circumstances. Compute net taxable salary in two circumstances. Can you guess what two circumstances? In two circumstances. First, write down first, he is opting to pay tax as per old regime. First is, he is opting to pay tax as per old regime. Second, what is second circumstance? He is paying tax under default regime. He is paying tax under default regime. That is section 115 BAC. Friends, did you understand both circumstances? What is the first circumstance? He is paying tax as per, he is opting to pay tax as per old regime. And second, he is paying tax under section 115 BAC. That is your default regime. Clear? Chalo. Leaving one line, write down basic. Basic salary. What is your amount of basic salary? Basic salary 1,50,000 per month. Basic salary is 1,50,000 per month up to 31st December 23. Clear, na? And 1,75,000 per month thereafter. So tell me, for how many months it is 1,50,000? For how many months it is 1,50,000? Tell me confidently, during PY 23-24, for how many months it is 1,50,000? 9 months. And 1,75,000 for 3 months. Sorted. Next, dearness allowance. Dearness allowance. 50% of basic. DA is 50% of basic. 50% of basic in bracket, right? 25% as per terms of employment. In bracket, please write 25% as per terms of employment. So friends, DA will be fully taxable. Don't consider 25% and all. 25% and all will be considered while computing salary for HRA. But while taxing, you will tax 50% of basic. Next, commission. How is this commission? Lump sum, very good, 1 lakh. Commission, lump sum, means no need to say lump sum. You can see it is 1 lakh, which means it is lump sum. Another commission. So of course commissions will be fully taxable. Another commission, how is that? Percentage of sales. It is 0.1% of sales. And overall annual sales is 20 crores. All of you. By the way, this commission will also be fully taxable. But this commission will form part of salary for the purpose of HRA exemption calculation. All of you with me? Till what point have you done? Commission. Next, bonus. What will happen with bonus? Bonus is very good answer. Monetary benefit. I know no one gave answer, but in video student should feel that you gave the answer. So bonus will be fully taxable. Monetary benefit. 1.5 months basic salary. So you know salary has changed in the year. So 1.5 months of which month's basic? October 23. That is also important. Next, children education allowance. Yes, you know the exemption. Given by employer is 500 per month. Totally given by him is 500 per month. And he has 2 children. Means, you know, 500 per month is given, not per child. But exemption will be 100 rupees per month per child. Only if you are not going for 115 BAC. Next, hostel expenditure allowance. All of you, hostel expenditure allowance. How much is given? 1,000 per month. All of you, 1,000 per month. Again, I will not tell you how many children. Given 2 children. Next, uniform allowance. What is nature of uniform allowance? You all know uniform allowance is a duty based allowance. It is exempt up to amount spent. So it is 5,000 per month and amount spent is 50,000 because 5,000 into 12 would be received. Exempt would be 50,000. Taxable will be 10,000 for all. All means if you are in 115 BSc or not. Next, medical allowance 10,000 per month. It's a personal. It is fully taxable. Personal is fully taxable. Next, entertainment allowance. Is he government employee? No, not given. So of course no. You cannot assume such things. So entertainment allowance. So it will become fully taxable and you will not get any deduction also. 2,500 per month. HRA. All of you HRA. How much is HRA? 35,000 per month. And he paid a rent at 30,000 per month. In which city? Mumbai. Where does it matter? 50% of salary. And then comes last point. So now your brain is activated to solve this. Okay. So now comes last point, friends. Profession tax of employee. So in the state, employee has to pay PT, profession tax to the state government. So profession tax of employee paid by employer 2,000. Who had to pay this? Employee. But who paid? Employer. So this is benefit. Perquisite. Perquisite for whom? Employee. So this will form part of GTS. Gross taxable salary. Why so? It's a benefit. Employee should have paid, but who has paid? Employer. And total PT for the year is 2,500. So indirectly, how much is paid? 2,500 is paid. So you will get deduction of 2,500. But first 2,000 will be taxed because for employer has paid. So first 2,000 will be taxed and then deduction will be given of 2,500. Suppose nothing was paid by employer for employee, then only deduction. That's it. So friends, you have to solve this in two ways. What are the two ways? Old regime and default regime. Old and default. Optional and default. Old also we can call as optional. So old and default. Whichever regime you want to calculate first, you can do that. And afterwards you can reconcile. You all have cleared foundation. So you have basic understanding. If I calculate as per old regime, then there is some difference between old and new. In this case, what allowances will not be allowed in new? What will not be allowed in new? Huh? children education allowance will not be allowed, means its exemption will not be allowed. One. Second, hostel. Third, but anyways, I am not taking any deduction for entertainment allowance because I am not a government employee. So anyways, I am not taking any deduction for that. House rent allowance and profession tax. How many adjustments? Four. So tell me honestly, can I do like this? First, calculate under old regime, taking all allowances, exemptions, and taking all deductions. I'll get one figure which will be reduced figure. In that, if I add back these four exemptions and deductions, then I will get under 115 BSc. Or I will first calculate under 115 BSc and afterward minus all the exemptions and deductions. Both ways is possible. You have done reconciliation, bank statement, bank's reconciliation. You can either start with cash book and get passbook balance or start with passbook and get cash book balance. Anything can be done, na? Or third way, particulars, old regime, new regime. But that is a long cut. Only four adjustments are different. Better is what? Reconciliation. Don't do long cut. Why you have to do same thing twice? Better do what? Calculate first by old regime and then add back whatever benefits are not allowed. You'll get a clear idea. So give the heading. Don't be shy. In your notebook, give the heading. Computation of net taxable salary. Computation of net taxable salary. Computation of net taxable salary of Mr. B for AY 24-25 in bracket relevant to PY 23-24. Have you given this heading? Computation of net taxable salary of Mr. B for AY 24-25 in bracket relevant to PY 23-24 under old regime. Please write that, friends. Under old regime. Under old regime. All of you have noted that under old regime. Please do two columns. Particulars and amount rupees, amount rupees. Two columns means two amount columns. All of you. Particulars, amount rupees, amount rupees. All of you. Particulars, amount rupees, amount rupees. Every minute of income tax class you will be solving. When you solve only, then only you will understand the provisions. Otherwise, we can discuss many things. They will go bouncer. If you don't do provisions, or if you don't do sums. That's why I asked you to maintain two notebooks. So once you understand by way of sums, maybe only provisions book you will understand. But don't expect you will do only provisions and understand. That's why I've called you at 8 o'clock. Today till 3 o'clock only. Tomorrow maybe 8 to 4. Someday maybe 8 to 5. In future. Depends on how we cover the things. So, basic salary. In bracket, write 1,50,000 into 9, close the bracket, plus 1,75,000 into 3. So there is no possibility of you sleeping in the class because every moment you have to solve. So you get figure of, check on your calci, 18 lakh 75,000 in the second column. All of you, second column, 18 lakh 75,000. Shall we go ahead? Next, DA, 50% of basic. So 50% of 18 lakh 75,000. Are you getting 9 lakh 37,500? Go for commission, lump sum 1 lakh. Yes, any doubt? Have I done wrong? 1 lakh 50,000 into 9, and then it increased to 1 lakh 75,000 for 3 months. In my opinion, it is correct. It is correct. Check your calci. Correct. Commission lump sum 1 lakh. Commission 20 crore into 0.1%, 2 lakh. On 20, take 7 zeros. Bonus. Bonus is 1.5 months basic. So basic of October. In October, your basic was 1 lakh 50,000. So take 1 lakh 50,000 into 1.5. So is it 2 lakh 25,000? Next, children education allowance. Write full form if possible. Children education allowance. Take figure received in the first column. Figure received is 500 into 12, 6,000. And you are in old regime. So let's exempt 100 per month into 12 into 2 children, 2,400. Take taxable figure in second column. Tell me, once you all reach till CEA, have you all reached till children education allowance? Who is on to which point? Who is on to which point? Acha. Then do hostel expenditure allowance. 1,000 into 12 in the first column. Less exempt 300 per month into 12 months into 2 children. 7,200. So taxable in second column 4,800. Uniform allowance 5,000 into 12 60,000 less exempt amount spent. Amount spent is given 50,000. You can keep on checking your sum. 10,000 will be taxable. So friends, observe whatever was fully taxable, I have directly taken in second column. Whatever was exempt, I have first taken in first column, then taken the exemption. Next, medical allowance fully taxable 10,000 into 12. I hope friends you have reached till this point. Who is on to which point? So children education allowance received was 500. That's it. 500. That's it. So it's not said per child. So 500 is total. Hostel expenditure 1000 is total. It is your policy to have two children. It is company's policy to give 500. It is government's policy to exempt 100. Got the difference? Chalo. Entertainment allowance. Entertainment allowance fully taxable. 2500 into 12. Second column directly. 30,000. Who is on to which point? Who is on to which point? HRA. Received 35,000 into 12. 4,20,000. Less exempt under section 1013A. Friends, less exempt under section 1013A. So what will happen? Working note. Make working note for that. Don't write any figure, leave it blank. And lastly, profession tax of employee paid by employer. It's a perquisite for employee. Profession tax of employee paid by employer. It is perquisite for employee. So please take it taxable in second column. Then you will have gross taxable salary. Leave it blank. Why blank? You have not yet calculated HRA exemption. Please leave it blank. Listen to me, leave it blank. Gross taxable salary. Next line, less deductions under section 16. 1616. In that you have got 1A standard deduction 50,000. 2 entertainment allowance allowed only for government employee. So here it will be dash. And profession tax 2,500. So friends, 50 to 500 will be total of deductions. No second opinion in that. All of you, 50 to 500 will be what? Total of your deductions. Therefore, net taxable salary, please leave it blank. And you will write full form those who want to pass. Net taxable salary. Leave it blank because for you GTS is also pending. Don't blindly copy. All of you blank net taxable salary. Shall we go ahead? Shall we go ahead, all of you? Yes or no? Fine. Computation of HRA exemption under section 1013A. Give the heading Computation of HRA exemption under section 1013A. That's your working note. Next line, you will say list of following three. All of you list of following three. All of you list of three. Can I start? First, actual HRA received. What is the actual HRA received? 35,000 into 12. On the extreme right hand side, take the figure. Please take the figure on extreme right hand side. Is it 4,20,000? Second point, rent paid less 10% of salary. Give asterisk to salary. Rent paid less 10% of salary. All of you know the rent paid. Rent paid is how much? So next line write down 30,000 into 12 in bracket. 30,000 into 12 in bracket. Minus 10% of dash. Why dash? We don't know what is salary right now. So minus 10% of dash. Third point, you are in Mumbai. In the sum you are in Mumbai. So 50% of salary. So next line 50% of dash. All of you honestly put a dash. We will calculate now salary. Once you are done till this point, tell me. Those who are watching live online on YouTube can, or those who are watching recorded can pause the video to complete it. All watching here done. 50% of dash. Go to next line. Salary is equal to basic plus DA terms of employment plus commission percentage of sales. Please write definition of salary. Basic plus DA terms of employment plus commission percentage of sales. Did you write salary for the purpose of HRA? Did you all write salary for purpose of HRA? Basic plus DA terms of employment plus commission percentage of sales. Sure, all of you with me. Basic next line equal to, copy your basic from your salary statement. Basic is 18,75,000. But DA, what was your DA? 937,500. But what is given in the question? 25% as per terms of employment. So into 25% and plus only that commission which is percentage of sales. So don't take lump sum commission. Take only 0.1% of 20 crores. So friends, Please on your own calcs take the total and tell me whether you are getting salary as 23 lakh 9,375. Yes, no? Take your time, but don't copy the figure. Do it yourself. Are you getting 23 lakh 9,375? So what are you waiting for? Go ahead now. Go ahead and show the HRA exemption, please. Show the HRA exemption, please. Rent paid 30,000 into 12 minus 10% of 23 lakh 9,375. So 3 lakh 60,000 minus 2 lakh 30,938. 3 lakh 60,000 minus 2 lakh 30,938. Are you getting this figure? 129,062? No, no, don't do point 0.5 and all. Salary, 10% of salary you can take as 22 lakh 30,938. So you will get exemption of 1 lakh 29,062. And then 50% of salary, that is 50% of 23 lakh 9,375. So friends, tell me what will be the exemption? Did you all get? So next line, can you write? Therefore, therefore, exemption rupees 1 lakh 29,062 being least of the three. Tell me honestly once you do this. Did you complete? Yes, no? Can you please take this exemption here? 1 lakh 29,062. In the salary statement, take the exemption. In the salary statement, take the exemption. And tell me what is what is HRA taxable? 2 lakh 90,938. Are you all getting 2 lakh 90,938? Can you get GTS now? Take your time but get GTS. Total of second amount column means basic plus DA plus commission lump sum plus commission percentage of sales plus bonus plus taxable children education allowance plus taxable hostel expenditure allowance plus taxable uniform allowance plus medical allowance plus entertainment allowance plus taxable HRA plus profession tax of employee paid by employer. Please take total. Don't be shy. Tell me what is the total. Is it 37 lakh 98,838? Have I got it correct? Have you got it correct? Have we got it correct? Deduct 52,500 and get NTS. And then pat yourself if you have got 37 lakh 46,338. All of you have completed this. Those who are watching online. Shall we go ahead? What we have to do now? Yes. Please write down. Are you all with me? Write down. Yes. Please write down. computation of net taxable salary if he is paying tax under default regime. Computation of net taxable salary if he is paying tax under default regime, that is under section 115 BAC. That is under section 115 BAC. Now you all will help me. A point, next line A point, net taxable salary as per old regime. What is NTS as per old regime? Yes, friends. 30, 37 lakh. Okay, agreed. 37 lakh 46,338. B point. Add. Add. Exemptions not allowed. Which exemptions are not allowed? Yes, friends. Exemptions not allowed. May I know which exemptions are not allowed? Okay, you will write full form. Children education allowance. What is the amount that got exempted? 2,400. Hostel expenditure allowance 7,200. And one more was disallowed. One more is disallowed. House rent allowance. What is that? How much exemption you are enjoying? 1 lakh? Sure. You have told me exemption figure, right? 1,29,062. And then one deduction is not allowed. But standard is allowed. So add deduction under section 16.3 of PT 2,500. Did you understand, all of you? Can you add back 2,500? And now can you tell me what is your net taxable salary as per 115 BAC? Don't be shy, tell me. 38 lakhs 87,500. Sure. All of you check whether it is 38 lakh 87,500. Are you happy? Did you understand what to do? Are you comfortable? Shall we go ahead? All of you are comfortable? Go ahead. Go ahead. Digest all these things. Think on all these things. We will do one last thing and then to do then take a break. Give the heading tax free perquisites. Please give the heading tax free perquisites. So tax free perquisite means its valuation will be nil. In your provisions and concepts book, give the heading tax free perquisites. So what is the best thing about tax free perquisites? Its valuation will be nil. So you have to just learn which are the benefits which are tax free. Means employer will give these benefits to employee, but in employee's hands value will be zero. So tax free perquisites valuation nil. So there are 8 tax free perquisites. 8 tax free perquisites. 1. Medical insurance premium of employee paid by employer or accident policy. Second, what is second? What is second? Facility of free telephone. Friends, not telephone allowance, but facility of free telephone at residence of employee or telephone expenses reimbursement. Self-explanatory, na? Employer has given you telephone connection or employer has given you mobile connection, tax free. Or you are submitting your bill, mobile bill, telephone bill to the company. Company is reimbursing you that, tax free. Enjoy. Facility of free meal up to rupees 50 each meal. Why do you think I've put a asterisk to that? My assistant told you one thing. Seventh point. What is seventh point? No exemption of 50 per meal while computing value of perquisite. So this particular point is only for old regime. This is the only point only for old regime. Other points will be for old and new, both. Understood now? Then facility of free education to employees' children up to rupees 1000 per month per child. You are soon going to apply each and every point. You know, employer is having a school where employees' children are learning. So that is tax free up to rupees 1000. Means cost of such education is 5000 per month. So taxable will be 4000. Gift in kind. Kind means jewelry gift, some shopping vouchers, match tickets, movie tickets, not taxable. Up to rupees 5000 what? Per annum. Friends, per annum means during the year, if such voucher exceeds 5000, it will become taxable. Interest free or concessional loan. Employer is giving loan to employee up to rupees 20,000 of loan. See, loan is not benefit, friends. What is benefit? The fact that I am not taking from you interest on that loan is benefit. Because I will give you loan, you will pay me back the loan. That's not a benefit. Benefit is you are using my money without paying interest. If it is up to 20,000, it is tax free. Snacks and refreshment means tea, coffee, snacks provided to employees at workplace. And lastly, facility of use of laptop. Whose laptop? Who is using? Employer's laptop, employee is using. It's a tax free perquisite. Even if completely used for personal use, it is a tax free perquisite. Agreed, all of you understood? Have you taken down these perquisites? So friends, that's it in this session. In next session, we will continue with salaries. Obviously, what we will do in next session, we will learn how to value some perquisites. And that value will become taxable whether you are in 115 BSc or not in 115 BSc. Value is going to be taxed. Problem is only for exemptions and allowances, exemptions and deductions. Only those are not allowed. But while taxing, you should tax everything. Okay, so how to value perquisites? Which perquisites? That we will see in the next session. So right now time is 10:16. Assume 10:15. We will meet at 10:30. Okay, that's it. Thank you. Those who are watching YouTube session, please don't forget to subscribe the channel and hit the bell icon. Thank you.